Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. The broader markets, they continue to do well. The Nifty, though, flat with some negative bias. So that and a lot more, which is lined up on the show today. Hey, Vivek, good afternoon.
Good afternoon to you. Broader end of the market, flirting near the lifetime high levels. But first up, let's start off the show with the main headlines of the day. Stocks trade in a narrow band with both Realty and Pharma index clocking some gains, even as IT and autos drag. Broader markets outperform.
Ujjivan Small Finance Bank is surging in trade on the back of strong business growth in Q4. Deposits grow 23.9% on a YY basis, while CASA ratio grows nearly 23% sequentially.
Aavas Financiers gains a strong dispersals momentum leads to healthy AUM growth. Stock up over 8%.
Realty stocks in focus as companies report their business updates. Macrotech Developers meets its sales guidance of 14,500 crore rupees. Puravankara sees its pre-sales volumes grow 93% on a YY basis. Soba under pressure as sales value dips sequentially.
Amba Enterprises gains in trade after announcing a definitive agreement for a new joint venture to manufacture driving gears, couplers for including all types of wagons, trams and Vande Bharat trains.
Okay, all right. As we were pointing out, it's the broader market party that we are seeing today. 210 points higher on the mid-cap index. We have the small-cap index, which is higher by 0.6% as well. The Nifty has been quite range-bound today, so 14 points higher there. But, of course, with that negative bias that we are seeing right now. Nifty Realty Pack, that continues to do well. That's the top sectoral gainer today, followed by FMCG as well. So that index is up 0.5%. But when we talk about the losers, it's the Nifty IT, which is seeing some pressure, 0.7% lower there. But yes, that continues to be the case. And the big Q, of course, apart from all the Qs that we are discussing, it's a Friday.
It's a Friday, and that's what we are all waiting for, another couple of hours, and we'll be done, at least for this particular week. But coming back to how the broader end of the markets are doing, look at the mid-cap index. Mid-cap index now hovering near the lifetime high levels, hit the lifetime high yesterday. Today up for the 10th straight session. When you're talking about the small cap and the Nifty 500 index, today up for the 11th straight session. So, it's possible that you could see some profit booking emerge because the rally has been quite continuous for the last 10 to 11 trading sessions. But in the list of stocks that are doing quite well today, in our special segment, Mid-Cap Movers, we have Hormas to take us through the mid-caps that are moving around in the session. Hormas, quite a few metal names, I assume?
Metal names, and more importantly, the Nifty has already gone into weekend mode already, but the broader markets are behaving as if, hang on, we still have a couple of hours, may as well make some more gains. But to start off with the list of the top gainers on the mid-cap index, we have names that the IIFL Finance surprisingly topping the charts, now 11% higher. Now, Supreme Industries, Tata Chemicals clawing back some of the losses that they made, and PB Fintech as well among the top gainers on the mid-cap index. A lot of company, the particular sector that is doing very well though is the gas stocks, and city gas distributors are doing very well for themselves. IGL is up 6%, MGL 3%, both of them at the highest point of the day, as is Gujarat Gas, and GSPL also trading with gains of 4%. Now, some of the stocks, a slew of companies came out with business updates through the course of the day. Aavas Financiers is up 7.5%. Marico, some positive commentary coming in from the management, 2.5% higher there. ESF Small Finance Bank and Angel One, they came out with a business update yesterday. The stock was down 5% and another 2.5% being shed today as well. Some stocks that are doing well on the back of strong volumes. And Asahi India is the one that leads the charts. They're 7.5% higher for Asahi India. Mahindra Lifespace is 5%. Spark is in an upper circuit of 5%. And UTI AMC also 3.5% higher on extremely strong volumes. Some underperformers in today's trading session. There were a few to find, but Intellect Design Arena, they're 3% lower, as is Varroc Engineering. And Alkyl Amines, after an 11% surge yesterday, is witnessing some profit booking, as is Persistent Systems. Back to you.
Okay, all right. Thank you so much, Hormas, for joining us. So those are some movers in the mid-cap space. Let's now welcome Himen Kapadia of KR Choksi Securities for a technical check on the market. Himen, good afternoon. Thank you for joining us. Well, mid-cap seem to be doing well again. The Nifty, though, flattish right now. What are the next levels to watch out for on the Nifty?
Very good afternoon to you, Sonal. Thank you for having me on the show. It's always a pleasure. We spent 6 trading sessions here, Sonal, over here. Trying to close about 22,526 as far as the Nifty is concerned, Nifty spot. Frankly speaking, we are trading at the leash, so to speak. Like I said, it's TGIF, thank God it's Friday, but it's just a matter of today or tomorrow because the setup is positive, Sonal. The VIX remains sub 12. The Bank Nifty is performing and giving the necessary push-up. Stock like HDFC Bank and Kotak, which have been somnolent for, weeks now, have woken up, have started performing. So with the push from the Bank Nifty, I think it's just today, tomorrow, maybe day after, that the Nifty breaks out about 22,526. A close above that, I believe, would open the doors for 22,800. Setup is fine. If I were to look at the negatives, you have Brent, which has broken out with a dollar index, which is strong. So gold is on a tear. Silver looks good. So some of these asset classes probably wouldn't go up if equity is going to go up. So there is a dichotomy over there. But yes, in our market, I think the Nifty is just on the verge of breaking out today, tomorrow, day after. Sonal.
Thank you so much for that, Heyman. You've actually spoken about the dichotomy that you're seeing in terms of both the commodity price moves as well as the Nifty moves. Any individual stocks you're playing, in anticipation of the breakout?
Yes, hi Vivek. Frankly speaking, many of the stocks are looking good. Like you also mentioned, the mid cap is almost at its all-time high. It's all over the place. So a couple of stocks which look good. I go in for the safe one. Bajaj Finserv, high tops, high bottoms, above the 55-day exponential moving average. The mechanical indicators on the daily chart, the RSI, MACD, etc., have given a crossover buy. So has the weekly chart. And after almost, I believe, 3 months, we are going to close above 1660 today, as far as Bajaj Finserv is concerned on the daily chart. So a buy on Bajaj Finserv at 1675, stop loss 1645, target 1735, risk reward ratio 1:2. Second one is, like you mentioned, MGL is moved, IGL is moved. Gujarat Gas is the one which hasn't moved. Now the logic is we've spent 1, 2, 3, 4, 7 trading sessions moving sideways. Today the stock is on the verge of, I'm saying verge because the day is not yet over, on the verge of giving an upward bar reversal after taking support on the 55-day exponential moving average, and the mechanical indicators have given a crossover buy. So this is on the cusp of giving a mini breakout because it's on the daily chart and it's a 7-8 trading session move. So one can buy Gujarat Gas at 555, stop loss 535, target of 595. Vivek.
Okay, all right. Thank you so much for joining us, Heyman, and have a great weekend ahead. We'll do one thing. We'll slip into a short break. When we come back, we'll be joined by Abhishek Kapoor, the Group CEO of Puravankara. We'll discuss the company's business update and also the no cut that has come by the RBI in terms of repo rates. Welcome back. You're still tuned into Midcap Radar. Well, let's talk about some stocks now and get some corporate conversations going. Puravankara is surging on the back of a good fourth quarter business update. The pre-sales volumes are up 41% sequentially and up 93% on a YY basis. The management says that they had the highest ever sales value in FY24. Abhishek Kapoor, the Group CEO of the company, is joining us now to discuss this and also what's the plan going ahead with sales and volumes as well. Abhishek, good afternoon. Thank you so much for joining us. I just wanted some internals as well. The total launch pipeline that you had guided for earlier was around 15 million square feet in FY24. How much of it has actually seen an execution? What was the launch pipeline that led to this kind of volumes, almost 7 million square feet in FY24?
Well, thank you and good afternoon to you too, Sonal. So essentially, when we had given guidance, we were looking at about 15 million square foot for the year. And we landed up with about 10 plus million square foot of development area under development now, which has been launched. And the 5 million that we had thought we would be able to get in the last quarter has kind of spilled over to the next couple of quarters. But these are all launches that have not gone anywhere. And fortunately, from the value point of view, we've still been able to achieve what our internal aspirations were. At close to about almost getting to 5,914 crores. So overall, we are very excited with 7.35 million square foot having moved from 4 million is a pretty exciting thing. And we are optimistic about how we take it from here.
Just a follow up to that. So you had a target of close to 15 million square feet at the start of FY24. You ended up achieving around 10 million square feet. So now the remainder 5 million square feet, you said will go to the next 2 quarters of FY25. So where are you now starting FY25 at in terms of expectations of what you'd be able to achieve?
That's a very good question. We don't give any guidance on the value which we are targeting, but definitely we'll announce our indicated pipeline of launches in the coming year around 15th to 20th of May post the board meeting. So that plan is in works. Internally, we are working on our group AOP for the next financial year. And we believe that we will continue to push the trend up in terms of launches. So, of course, there is a spillover inventory which has come in sustenance with these launches as well. That will enable us to continue the sustenance business and grow it. Along with that, we will add to that the new launches from within the existing inventory which we have. We have about 30 million square foot, which we are yet to take to market now. And plus, we will take another, the new additions that we are making. Like example is last year, we added a redevelopment project in Bombay, in Lokhandwala. So that will definitely come in the next financial year. And a bunch of projects from within the current land bank will come in. And some projects that we are hoping to conclude in this quarter and the next quarter will also come in. So we will kind of make those announcements as we conclude those internally.
We consider these updates as earnings only sometimes, and we ask you the questions that would be forward-looking. But Abhishek, just wanted to understand the debt picture as well. Qualitatively, if not quantitatively, we would love if you give us the quantitative data as well. Have you seen further reduction in the quarter gone by? Because you're talking about a lot of launches, you're talking about capex, you're talking about the Mumbai redevelopment project as well. What does it do to your debt going forward?
So as we have always spoken about it, there are two parts to it. One, debt being taken to build the commercial asset. Second is the debt that is getting repaid from the existing residential, portfolio, because that's self-liquidating. And third category is what we are adding in terms of reallocating some of the capital from other markets and other projects into new acquisition. So on account of new acquisition, clearly the debt should go up. On account of current residential developments, the debt will come down because those will get repaid. And then, of course, as I said earlier on a debt per square foot basis, which is area under development, which is the real measure for us in terms of how we see our debt profile, is going to be very, very critical. So on an ongoing basis, on a per square foot basis, we'll be very much range bound. On an absolute number, you can expect some increase because we are aggressively looking at new acquisitions while we repay some amount of debt. But generally, I think we are going to be range bound as far as per square foot debt is concerned.
Understood that. Just to ask you another question, give us a sense of, what is the on-ground trend in terms of, you've kind of missed 5 million square feet of delivery in this particular year. So can you assuage concerns whether it was supply-led or demand-led? And when it comes to demand, can you give us trends in terms of how exactly realizations are panning out? Or do you see some aggression even from buyers?
Look, I think from the demand perspective, demand is pretty consistent across all categories, whether you look at plotted development or luxury or mid-segment. All categories, we are seeing consistent demand and increase. Price appreciation has been between 12 and 25%, depending on the project, location, micro market, and the product that we are taking to the market. Having said that, I think today, if you look at the inventory overhang across the industry, is very low. It's somewhere between 8-9 months, going up to 12 to 13 months. Therefore, we don't see any significant, challenges as far as the demand is concerned or price is concerned. I personally believe that the price, on an average, across the country will continue to increase between 8 to 9%, which will be inflation plus 4%, 3%, or 5% sometimes. So I believe that will continue as a trend. Having said that, one thing that is very clear that we are seeing as a trend is that the consolidation will continue. Stronger players, stronger brands continue to take away more and more market share. I mean, if you look at us, for example, we have grown by 90%, where the market has grown actually by 16%. So obviously, clearly a branded developer will come in and take in larger and larger market share, depending on what kind of volumes they can bring to the market. So I think that's the general trend that we will continue to see.
The general idea that we're getting, at least in the Mumbai market, when we speak to companies or experts, is maybe the prices have peaked out because the supply is way more than what the demand is right now in the market. But I'll come to your Mumbai redevelopment project as well. Last question on the debt. I wanted to understand your cost of borrowing. The last known numbers was 11.49%. We have not seen a rate cut now. How do you plan to bring that cost down? What is the split between banks and NBFCs when it comes to your debt split?
So the way we are seeing debt is we intend to continuously bring down debt, cost of debt for us. Since all of these projects are moving into under construction category, largely our debt cost was slightly higher on account of the fact that most of the debt was taken to launch or to buy new assets or new land. And that's where the debt cost was higher. Now, going forward, as we see these projects going into production and construction, we will definitely see that the cost of debt will come down. So our endeavor is to bring it down. Having said that, you're right. The cost of the repo rate has not been reduced, and therefore we're not going to see any significant impact, which was actually surprising in my mind. I thought that this would be a time when you would see some kind of an impact and some reduction. But I would guess in next 2 quarters, we'll definitely see a lowering down of interest rates.
Understood that. Now, talking about your foray into the Mumbai market, would you be looking at new projects? Are you looking at redevelopment projects? In the past, you have spoken about JVs with other companies or with other developers. So, what is the route that you're taking, and what will be your share of the profits, or what will be your share of the JV, whichever route you choose to take?
Right. So, from a Mumbai point of view, redevelopment is clearly our strategy, and it's going to continue to be our strategy. We are currently actively pursuing almost 20 opportunities in the redevelopment space. 4 of these opportunities are in very advanced stages of conversation, and we are looking at concluding some of those very, very soon. Though it's a longer process in terms of the process time that it takes for getting a redevelopment projects. So from that point of view, that is definitely an opportunity. And then for JVs with developers or fellow developers, definitely that's a continual process. We are open to those options, but largely they are JDAs than more than JVs, if at all. And our goal will be definitely to look at some of those opportunities aggressively. So we are out there in the market evaluating some of them. Hopefully, we'll make some announcements soon.
Okay, and redevelopment would be a separate discussion altogether, Abhishek, because there's so much happening in this space. But we'll leave it for now, and we'll discuss that later after your results are out as well. So thank you so much for joining us today and giving us all those details. So that's the word coming in from Purvankara, talking about good growth that continues and maybe some more price hikes that the developers are expecting. The stock is up by 5.5%. We'll do one thing, we'll slip into a break. As we do that, we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you are in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so do not miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com and we'll see you on 11th of May.
Welcome back. While we look at the markets, the Nifty continues to trade in a very narrow range, pretty much where we started the show. The market continues to stay quite stable over there. But the stock on our radar right now is Marico. The company's consolidated revenue grew in single digits for the 4th quarter. Mangalam is here to tell us more about Marico's quarterly update.
Well, Marico is higher by about 3% today after they've reported their 4th quarter update. Now, you would say that yesterday Dabur reported mid-single digit revenue growth and Marico is reporting low single digit revenue growth. Why is it that Dabur fell 5% and Marico is up 3%? Well, that's because Marico's revenue has moved back into positive territory after 3 quarters. So that is a positive trend. Secondly, the domestic business also posted a slight uptick in volume growth. Even as Parachute registered low single digit volume growth, and value-added hair oil did not do too well, Saffola did well for them. And they said that they will expect strong gross margin expansion And at the same time, the operating profit growth will be low double digit, as against Dabur, which said that their EBITDA will grow just slightly ahead of revenue. So margin expansion for Marico will be a lot higher, both on the gross margin front and operating performance. And the commentary, they said that they do expect domestic revenue growth to outpace volume growth in the quarters coming ahead. So improving trajectory, improving outlook, and better than expected operational performance is what is leading Marico higher in today's trading session.
Okay, so good quarterly update coming in from Marico. Thank you so much for that, Mangalam. Amber Enterprises, that is a stock which is doing well in trade. The company has entered into a JV to manufacture for all types of wagons, trams, and Vande Bharat trains as well. Upasana is here with more details. Upasana, what is the nature of this JV? The stock surged, but it has come off from those levels.
Well, a definitive agreement has been executed amongst the four parties, the JV partners, namely Eugen Machinery and AT Railway Subsystem Private Limited. It is important to note that AT Railway Subsystem is a wholly owned subsidiary of Sidwal Refrigeration Industries, which is a material subsidiary of Amber, and other two financial partners, namely Syncodia and Dugen International. Well, this JV has been entered for an investment and formation of a new JV company in India, and the main objective is to carry on the business of manufacturing all types of driving gears, couplers, pantograph for various rolling stocks, including all types of wagons, trams, Vande Bharat trains. Well, that's the reason this stock remains in focus today.
Thank you so much for that, Upasana. You know, the next set of stocks belong to the BFSI space. Aavas Financiers and Bank of Maharashtra are reacting after reporting the Q4 business update. Abhishek is here with more details. I think Abhishek hasn't joined us, but just to get a sense of how Aavas Financiers did, you saw the disbursals up quite significantly. The AUM growth was aided by that particular segment as well, and on the back of that, the stock higher by almost 8.5%. But earlier today, we spoke to Sameer Arora, the founder and fund manager at Helios Capital, to discuss his outlook on the market, future economic policies that can assist growth of the country, and his top sectoral bets. Listen in to what he had to say.
In a big picture sense, I'm bullish on the budget, or I'm going to decide on that day what to do next in terms of varying my net a little bit, 5%, 10% here or there. Because Mr. Modi himself keeps saying that it will be a transformational budget. And so let's see what he means by that. And secondly, as the government in the last, the Feb budget said that they will be reducing the fiscal deficit, or that is one of their goals, it can only be done by aggressive selling off some state-owned companies. The Indian market has been compounding in the fast in rupee terms at 13-15%, which is more or less in line with the earnings. Today, the valuation is not so attractive that we say it is the best time to invest, but neither is the valuation so bad because it hasn't gone up in the last many years. If you look at the full market, for us to feel this is some bad point to start. The fact that when India or somebody says we are growing at 7%, we take it for granted. But that 7% growth needs all these things to be done. You need a way to raise capital. You need a way for the government to do things so that they can invest. These things don't happen on their own. So for that 6-7% GDP growth, all these things are part of the game.
Okay, that's the word coming in from Helios Capital. But as we were talking about Aavas Financiers and Bank of Maharashtra reacting to their quarterly updates, Abhishek is joining us with more details.
Well, to begin with Bank of Maharashtra, there is a surprise package in terms of deposit growth that they have seen, which is pretty robust, or 3 times what the system growth has been with respect to deposits on a sequential basis. Deposits are up 15.65% YOY and about 10.2% quarter-on-quarter. Quarter-on-quarter deposit growth has been nearly about 3.5% for the system. CASA ratio has improved. CASA growth is robust at 15.8% quarter-on-quarter. So CASA ratio has jumped up to 52.7% when compared to 50.2% in the previous quarter. Advances growth have been healthy at 16.3% YOY and about 8% sequentially. The credit deposit ratio has slipped a bit on account of the robust deposit momentum. Aavas Finance's strong disbursals momentum has aided the loan growth this time around. Disbursals are up 19.5% YOY and about 38.7% sequentially. The AM growth is healthy at 22.1% YOY and about 7.5% sequentially. So the the disbursements to AUM ratio has remained steady for them on a sequential basis. It is on the stronger side at 64% plus. Asset quality has improved over there, and they have sufficient liquidity in terms of 3,000 crore, which forms about 17.3% of the AUM. Back to you.
Thank you so much for that, Abhishek, for making sense of those numbers. Ava's doing very well in the session today. But talking about valuations as well as the importance of governance in the banking sector, Prashant Kemka of White Oak Capital Management says that valuations are in line with the last 10-year average. Speaking at CNBC-TV18 special event, India Exchange, he also said that there are pockets of froth in the small cap space. Let's listen in.
Valuations, if you look at relative to India historically, we are not in the camp that they are, forget outlier, but last I saw, it is in line with the last 10-year average at the market aggregate level, at least as of month end. And I don't think March in particular, Feb, and I'm talking about, I don't think March in particular would have. And so I'll give you precise number from what I recollect. It's at 20.7 times is the last 10-year average forward 12 months, and we are at 20.5 times. So if anything, a smidgen below. So there are pockets of froth in small caps, but at an aggregate level, neither in large, nor in mid, nor in small, we never make that call. Stock selection opportunities are often the best in the most inefficient segments of the market. They always tend to be mid and small. So that overweight, over-allocation continues to be in mid and small relative to large at this time.
Okay, all right. That is some market opinion coming in. We'll keep getting these excerpts of the conversations. But for now, we'll take your leave on this edition of Mid Cap Radar. Stay tuned. Your stocks when we return.